and welcome. You are watching Business Plus here on News 9 Live. I am Krishna Kumar and we will be beginning this edition by talking about the big launch of the day, which is Google's own ChatGPT competitor, which is called as Gemini, which was launched today. Let's get deeper into it. The story is all about ChatGPT versus Gemini. What is going to happen? Bear in mind, it was in November 2022 when ChatGPT was launched. By January, it went on to become the fastest growing platform with over 100 million users and $29 billion in valuation for OpenAI. Now, by Jan 2023, that was. Now we're in December 2023 and Google has come up with a rival called Gemini. The words that are being used to describe Gemini are human-like, extremely advanced. It comes in 3 versions: Pro, Ultra and Nano. Pro is already available on Google's Bard platform. Ultra will be launched early next year and Nano very soon. So will Gemini be a true competitor to ChatGPT, considering the growth of ChatGPT and considering the pace of growth of ChatGPT? We have Mr. R. Sridharan, Editor International of TV9's News 9 Verse, joining us in the studio. We also have Mr. Nikhil Pava, founder of Media Llama, also joining us live on the broadcast. Nikhil, as always, pleasure having you. I'm going to begin with a quick chat with Shri about this. Shri, I mean, come on, we've seen the scorching pace at which AI and generative AI, specifically speaking, LLMs, large language models, specifically speaking, the pace at which the growth is there. This is no less than Google rivaling ChatGPT. Where are your bets?
So this has been a race between Google and OpenAI ever since the small startup with 800 people, suddenly overtook Google, which has been calling itself an AI company for almost a decade now. And suddenly they put out ChatGPT and looked like Google was losing the race. So this is Sundar Pichai and team coming back at OpenAI with what I think is a much more powerful product. Google says it's their most powerful AI yet. And I think this is possibly the most powerful AI model out in the market yet, compared to even GPT-4, which is OpenAI's latest generative model. So what is different about this, Krishna, is that this is multimodal. If you look at ChatGPT or GPT-4, they have verticals that they employ. For example, there's a AI which is like audio, then AI that's doing text, and AI that's doing video. So Google, from the word go, has built a model which is multimodal. So Gemini can read text, it can read video, it can read audio, it can even read code. So this is a phenomenal improvement which Google has come back with in a bid to get ahead of OpenAI.
Fair enough. Better than, ahead of are the words that are being used. And because, Nikhil, if I were to ask you, the skills at which it's supposedly better than ChatGPT-4 even are summarizing, reasoning, coding, interesting categories under which it's outperforming ChatGPT-4, would you say?
And I think these are all critical categories, especially with coding, because coders across the world have already started using, especially Microsoft's Copilot, and ChatGPT for writing code. What you're also seeing is that a lot of web development is going to start getting automated. And so, there was an initial thought that AI is going to replace more of the physical labor, the more mundane tasks first. But it looks like, and Sam Altman said this, it looks like it's replacing the more creative tasks first. The other thing to look at, KK, is that Nano is going to be the real impactful app over here, because it's going to be integrated on device. And so, like it's starting out with like an auto summarization feature in the recorder, but in the keyboard, it's also going to be integrated. As more and more services get, AI services from Google get integrated into existing Google products, it has a multiplier effect. Not only will the products improve faster because of usage, it'll also mean that more of Google's products will start getting used. AI products will start getting used because they're already integrated into Google Apps directly, right? So I think Google has that advantage in terms of the scale of uses that it can bring in.
Right.
And the
Nikhil,
data
simple
that
word is
generates-
captive audience. Captive audience. I mean,
So
Google starts out with the captive
So the
audience, doesn't it?
simplest
Teshri?
thing,
The
I
power-
think, Krishna, what our viewers need to understand is that this is the first AI model which has proved to be smarter than an expert human. Okay, on all these SOTA tests, so-called SOTA tests, which is state-of-the-art tests, include like MMLU, triple MU, all these tests. The Google Gemini has scored much higher than human experts. So now these are all very complex things. For example, if you take the triple MU, which is massive, multidisciplinary, multimodal understanding, which actually requires you to have a college level understanding and deliberative reasoning. Even here, Gemini has scored much better than human experts. So this is a totally different direction in which Google has taken AI. And as Nikhil mentioned, given that Google is a large tech company with actual products out there, you mentioned about Nano. So Nano is now going to be integrated with their phones, and then so we can think of Ultra, Pro, and Nano as basically the Ultra
The
at
three
the
different
enterprise level.
iPhones.
The enterprise level. A Pro is going to be for the professionals, hardcore professionals,
Right.
and Nano for people like you and me who are like going to need it anyway. So I think this is a huge a leap which Google has taken,
Right.
And for the moment, I think it's ahead of OpenAI.
Okay, Nikhil, you wanted to comment on it.
Yeah, the other thing it does is it makes Microsoft all the more important for OpenAI because it is on users of OpenAI products on Microsoft services that OpenAI is now going to start developing and improving.
Yeah,
and so let's
especially
not-
now after all that's gone down recently, isn't it, Nikhil?
Not just that, but it's just that symbiotic relationship.
Yeah.
OpenAI is important for Microsoft, and Microsoft is now increasingly more important for OpenAI. Something that we'll have to keep in mind. I'm not sure where this leaves Facebook's Llama, to be honest. I know they're trying to increase usage and deployment by open sourcing certain parts of it. But this is a race, and Google has come back in a big way, and Google and OpenAI have a head start right now.
Okay. Head
But
start,
I think
both
that
of you are
just changed yesterday with Gemini, because I'm a big believer in what Google's done now.
Fair enough.
But
My question here is, both of you are agreeing on the fact that the head start, OpenAI has had the head start, but definitely
Yes.
Google has probably arrived with a better
come
product
very strongly
later.
from behind, yeah.
My question here is that if I were to do a like-to-like comparison, the pace of growth from ChatGPT, it's actually two models, which is 3.5 and 4. We
Right.
went from ChatGPT to ChatGPT 4 in a matter of 5 months. And in that 5 months, it already went on to be the most downloaded
Right.
platform
Yes.
with nearly $30 billion in valuation. So which means the clock is ticking on Gemini and the pace at which Gemini's adoption will take place, isn't it, Sri?
Absolutely. So which is why on the Bard chat, it's already been integrated, so you can start using it from today. Now, I want people to understand what the capability of this really is, Krishna. Let me just give you two small examples that Google itself has talked about. One is, their scientists who are working on Gemini, they asked their model to go through 200,000 scientific papers and filter out the most relevant papers for a specific topic and do it in a couple of hours. So this Gemini system, during a lunch break, merrily went through some 200,000 papers, shortlisted the relevant papers, 250, and gave these researchers a summary of just those 250 papers. So
Right.
if a human were to do it, Krishna, it would take them 274 years, even if you read 2 papers a day. Okay, so that's the speed at which it just burned through all these, research papers. Now, the other thing, Krishna, the fact that Gemini is multimodal, it's integrating, audio, video, and text, and also code. What happens now is that, let's say like for example, my son, he does homework. I can actually use Gemini. His handwritten homework can be scanned, uploaded. It'll read his handwriting, it'll look at the solution that he's sent, tell him whether he's right or wrong, and if he's wrong, also tell him how he should have done it. So we are at the cusp of something truly transformational, because the AI, race, which has been going on for a while now, is now at a totally new level. This is going to be the age of artificial general intelligence, AGI, and I think this is the starting. What we're seeing with Gemini is the beginning of AGI.
The beginning of AGI, fascinating, isn't it? In that sense, is it 2.0, AI 2.0 in that sense? Because we've seen a burst of this right through from the end of 2022 to up until the end of 2023.
No, KK, you're going to keep seeing bursts from here on because really, because technology growth happens geometrically,
Exponential.
especially with AI because it learns from the usage, right? And we've seen that in the 2016, 17, 18 when Google first rolled out multilingual processing, where it wasn't just translating languages from English to others, but languages from one to the other using English and then directly. So I think there's a you're going to see geometric progression because the more the deployment, the more the usage, the more these models learn from usage, the better it will become. Will become.
Right.
I don't know what you're going to see. Let's say even a year from now. This has already blown us away.
Right, exactly. Because again, it took us a matter of months to get from ChatGPT 3 to ChatGPT 4.
So Krishna, to Nikhil's point, we are already seeing what are called these emergent capabilities in the AI systems, where you haven't really taught the AI model a particular thing, but it learns on its own. For example, there's a case study on how an AI model learned high school chemistry entirely on its own, although it was not even trained on that kind of text. So these are like, interesting times, which is why I think there are a lot of risks also associated with AI and AGI. And I think there's a need for Google, OpenAI, Meta, all these people to come out and talk about what their training models are about and how are their systems behaving. Because don't forget, there's already an executive order in the US from the President of the United States, which says that they have to, any new system that is launched, they must submit the reports to the government on if there are any issues they're facing and what are the test results they're getting. So I think the safety of AI is going to be a very, very big, issue as we, while this race continues, safety is going to become a very, very important concern.
Yeah, be it a chemistry teacher's job or a child's homework, if AI is going to threaten everything from the teacher's job to the students' own ability to do the work on their own.
And the researchers, don't forget the researchers.
And all the important human researchers around. Nikhil, my question here is that as we encounter every single burst of this in the AI universe, the questions will always go back to ethics and how are we going to make sure that this is regulated?
So we have two modes of regulation that are being discussed right now. One is in the US, the executive order takes a fairly light touch approach, pushing for transparency and accountability. And then we have the hard approach that the EU has taken. What's interesting is in the last week alone, 3 European Union governments have written to the EU saying that there needs to be a lighter touch approach. You can't do hard regulation right now. And so while the world may need more checks and balances in place, countries also realize that harder regulations might actually hinder development. Also, the more complex the processing becomes, the more difficult it will become to identify hallucinations, which are basically mistakes that the AI makes or things that it concocts. In the US, you've already seen...
What's happening with Gemini also.
All right.
So, no, just to Nikhil's point, Krishna, he mentioned about EU and US. So now the thing with EU is that it has made regulations very specific to generative AI, whereas the US is looking at AI from the point of view of impact on customers, from the consumers.
Impact on society.
On consumers, basically.
Right.
So I think that's a smarter approach to my mind, because no matter what the technology is, if the impact of that technology on you is going to be adverse, then there's a need to regulate it. Rather than saying that, okay, this regulation is only for generative AI. What happens if something different comes in tomorrow, right? So then is your regulation going to become redundant? You need to update it. I think the better, smarter thing to do is to look at how does this technology actually impact human beings, the consumers, and what do we need to do to protect them?
Right, and this even as we await our own regulation here in India for regulations on AI, considering all the talk about deepfakes these days, isn't it, Nikhil?
I mean, like I keep saying, this is going to be India's deepfakes elections. And the government's frankly doing the right thing in terms of looking at regulating, but how it regulates deepfakes is going to be tricky. Identification of deepfakes is extremely complicated. And platforms at scale will find it impossible to deal with deepfakes because, even if you change, let's say, half a second in a video, the hash value it generates, which is going to be different. So you're going to find that it's going to become extremely tricky for platforms across the board and for regulators across the board to figure out how do you deal with deepfakes?
Right. So one way, which I think an idea which has been floated in the US by some of these AI experts, is that you have some sort of a digital stamp on approved content.
It doesn't work.
Like you have, no, it'll work. Especially if the government is a user, then you can look for the digital stamp and then choose not to, take the non-stamp, information seriously, right? So it's possible to. These are early solutions. Obviously, Nikhil, I don't think anyone has the exact answer to how deepfakes are going to be dealt with. But there's some thought process.
There is already tech available for removing it. There's already tech available for removing watermarks. Every time you try watermarking,
no, I'm saying that the US government is considering using watermarks for its own content, digital stamp. And this is from the gentleman who co-wrote their Bill of Rights.
Right.
AI.
And I guess
and those watermarks can also be replicated and put into other content as well.
Fair enough. These are early days.
Solutions
are yet to come. We're still arriving at what exactly is the problem to start with. Deepfakes is just the tip of the iceberg when it comes to the problems associated with what AI and how AI can impact society. So these debates are going to continue, and that's the reason why we're asking those questions on a day of a launch of something as big as Google's own generative AI platform, better than ChatGPT 4, which is called Gemini. Nikhil, as always, pleasure having you enlighten us every single time here on the show, and hope to keep having you on the show. And Shri, thank you so much for taking time out from your busy schedule to be with us here on this edition of Business Plus. And with that, we move forward to the other big story of the day from Paytm. And for that, let me bring in my colleague Karthik Malhotra for it. Karthik, great to have you here on the show. I'm asking you a simple question. Of all the things that we thought Paytm was going to make news about and have its stock get hammered, exiting small loans was not exactly on top of our minds, was it?
Well, actually, Krishna, this story has been on around for the last almost a week, 10 days or so. And in fact, our team, News9, had in fact reached out to Paytm 197 Communication, seeking clarification from them that are you looking at exiting this small loan unhedged sort of category of personal loans, and there was a denial. But that story in fact got confirmed yesterday in the analyst call, where Paytm went ahead and very clearly said
apart from us, this was not in the top of mind of too many people out there.
Exactly. And yes, so as things stand right now, Paytm is looking at exiting the sub 50,000 rupee category of personal loans. A chunk of that, about 55 to 60% of that, was incidentally the buy now pay later schemes. So easy access to money, easy access to go ahead and purchase goods in a BNPL sort of a scheme, and that scheme in any case has been attracting frowns from the Reserve Bank of India. And that's not the only thing which the Reserve Bank of India is unhappy about. RBI is also unhappy about the personal loan category per se,
right,
which by definition is collateral free and hence unhedged. So what did the RBI do? RBI went ahead and tightened the noose around these personal loans, asking banks to keep aside 25% more capital, risk weight as they call it, to address this ballooning challenge of personal loans. So now the fundamental question which is really bothering me is that at the time when we were discovering the story of Paytm exiting the small loan business, we have a competitor, another fintech, PhonePe, which was making plans to enter this very segment. And PhonePe, as you know, Krishna, has diversified its offerings, where it's not just a simple payment platform anymore, UPI enabled payment platform and wallet platform. It is also an insurance player. And in addition to insurance, as part of its financial services diversification, it was looking at this personal loan category very seriously.
Right.
So I think the question that begs now is that, is PhonePe going to discard that strategic vision it had to get into that sector?
Right.
While we talk about Paytm really losing its core business, which was contributing as high as about 56% of its loan disbursement business.
Right. And in a sense, this is also a larger play when it comes to what's happening with this entire small loans business and the scrutiny over the small loans business, because you saw stories of harassment, stories of problems with this entire business not being run ethically, starting from the pandemic, when people in need of cash and when these businesses flourished. And clearly now we are in the post-pandemic world. This entire ballooning of small loan businesses seems to be finding a place where it needs to go further, but it needs to go further with the right checks and balances.
Absolutely. So I think Paytm has also gone ahead and said, just to add to the story, that it will now focus on the over 50,000 rupee loans and securing those loans by way of some collateral. Right. So these are going to come with proper checks and balances, with the proper KYC intact, the credit rating of anybody that Paytm wants to lend out its money to. But to answer your question, I think loan recovery has been one of the most critical challenges which NBFCs have been struggling with. And RBI's whole concern, while tightening this noose around unsecured loans, was the very fact that what happens when these loans go bust, and what really happens when you find yourself stuck in a situation that you have lent out enough capital and there seems to be very little recovery by way of those loans ever coming back to the NBFC. Now, peculiarly with Paytm, another challenge was that Paytm itself was not an NBFC.
Right.
Paytm itself is not a non-banking financial corporation. So it's actually all this while been playing the role of a middleman. You have a customer base and you have your contracts with NBFCs. You get NBFCs, the customers are disbursed the loan actually from an NBFC through your platform. Right. So you actually stand right in the middle of pressure from both sides, because you have borrowed money from NBFCs and you have lent it in an unsecured manner to an unsecured customer. If this guy defaults, not just do you not get your own money back, you've got to pay this money at an interest rate to another player, which happens to be NBFCs. Right. So I think a timely decision from Paytm right now to look at the suspicion that RBI has now fanned a little more seriously and exit the business altogether.
Right, and also, Paytm as a stock losing over 20% in intraday on the 7th of December, steepest decline in 2 years or so. Something to watch out for all those having positions in Paytm and this particular story.
But when markets closed, it had recovered a little bit. It was still down. It was down about 18% or so, but it has recovered since.
Right, it has recovered since, but it's been quite the hell of a day of trade for the Paytm stock. Paytm exiting the small loans business. At the same time, Karthik, before we just wrap up the story, I also wanted to put that buy now, pay later, situation where you had a company like Zest Money, which is a buy now, pay later company, shut down recently. And we've seen that entire sector being in as much trouble as EdTech.
Absolutely, Krishna. And I think this was the very sector which saw its resurgence, or in fact, its birth during the pandemic. Now, Paytm, of course, has been existing much longer, but companies like Zest Money actually mushroomed only during the pandemic when jobs were hard to find, when salary cuts were rampant, and people needed easy access to some sort of monetary relief. And that is when companies like Zest Money really mushroomed, ballooned, and came to a point where they found a great market out there, an unserved market, which was unable to get loans from banks, unable to do the paperwork and the credit ratings to get some sort of a loan from NBFCs, and found itself in a very, very happy position because it had money to lend. In the case of Zest Money, while there was borrowing, of course, from NBFCs and banks alike, there was also, enough capital available by way of investments into Zest Money itself, which it was perhaps risking lending out as unsecured loans to customers. And now I think Zest Money being one of the early sort of collateral damages of this RBI's frown on BNPL schemes, and that of course had gone ahead and lured enough and more customers to actually get access to that easy capital and burn it without really being credit worthy to pay that money back.
Right. So that's the story of Paytm exiting the small loans business, which we will be continuing to track because it's completely not out. As Karthik was talking about, 50,000 plus category, it still continues to remain invested in. We'll have to see how it goes. But moving on here on the show, we are closing in on the last tick coming up in just about 5 minutes from now. So let's talk about something from the stock markets to wrap this edition of Business Plus up. And the story is of a man called Mr. Rajiv Jain. His company GQG, a serial investor into all Adani stocks. Guess how much GQG made? 17,000 crore rupees in just the last 9 months. So for all the stories doing the runs of Adani, if there is somebody who's winning with Adani, it is GQG and Rajiv Jain. Isn't it, Karthik? What a story. In a situation where, you're looking at how Adani stocks have bounced back, specifically in the recent past, in the last week to 2 weeks per se. Not surprising, isn't it?
So, Krishna, I think when everybody had lost hope on Adani stocks, and not just retail investors, in fact, the kind of beating that the Adani stock took immediately in the immediate aftermath of the Adani Hindenburg research report. The Hindenburg research report naming Adani and Adani's violation on 2 counts. One, wrongful gains by taking short positions, and the second, violation of minimum public shareholding. We saw that the Adani Group stocks, and all 10 of them listed on Indian markets, had taken a massive beating. And GQG came in as one investor which went ahead and bought and bought and bought and bought. And that not just kept the Adani float in some sense, protected from going even further down, but GQG and Mr. Rajiv Jain, who in fact is one of the co-founders of GQG, which started in 2016, really taking bullish calls on Adani and arming himself and creating this sort of war chest by arming himself with Adani stocks. And now with 2-3 series of reports. And what are these reports? One, of course, was the pending Supreme Court order in the case where it has reserved its judgment yet on SEBI, not really ruling one way or another, but some sort of a positive signal picked up by markets that got Adani stocks rallying.
Right.
And then the second one came just 2 days ago, where international DFC in the US went ahead and approved a $550 million loan to Adani Ports and SEZ to build a port in Sri Lanka, calling the Hindenburg research irrelevant and inconsequential.
Right.
Actually saw the biggest rally, I think, in the last 1 year, ever since Jan 25th, when the Hindenburg research report came out, and that made actually the Adani stocks really go up in a tizzy. And look at the killing that Mr. Rajiv Jain and GQG has made. 17,000 crore rupees as of market close yesterday. That is the amount of money that GQG has made. His investments, his early bets on a tanking Adani series of stocks paying off very well. And
paying off as much as 84%.
84% and 17,000 crore rupees. That is the value that Rajiv Jain has actually made.
And there you go. If you had any doubts about what we're talking about, those numbers really tell you the story of the Adani Enterprises. The initial investment at 3,403 and the current value 3 times that.
Wow.
Absolutely. Look at every single number over there. It's at least a double everywhere you go. Barring a couple of Adani transmissions and a couple of others where the gains are not as obvious, but the big ones like Adani Enterprises and Adani Green Energy and Adani Ports and SEZ, the returns have been it's been a quantum jump. Exponential is the best way to describe them. Where does GQG go from here? That's my question.
Krishna, I think at this point of time, if I were Rajiv Jain, I'm not. By any means of imagination, I'm not.
No.
But
if
I think
this
would be a time to book some profits, in my opinion.
Okay.
While I think analysts out there may differ and may disagree with me, Adani Group and the promoters would definitely disagree with me. But the verdict on the Hindenburg research report is not out as yet.
Yeah.
Neither has SEBI. While SEBI says that it has concluded its investigation in 22 out of the 24 matters, the other 2 are still pending. The opaque structures continue to exist. SEBI has written to companies, who are based outside the shores of India, seeking information on the final beneficiaries of what short positions were apparently taken. But I think this may be a good time to book some profits and perhaps still stay invested if they really believe that there's nothing substantial that will come out of the Hindenburg
I have
report.
a question. Are you talking to Rajiv Jain and GQG? Are you talking to the retail investors out there?
I'm saying if I were Rajiv Jain, perhaps I'm not as risk. My risk appetite is not perhaps as high as Mr. Rajiv Jain's. As a slightly risk averse, yet somebody who did take that risk and bet in early days, I would want to cash out a little bit right now.
That's why I'm asking. So that sounds more like the retail investor talk out there. If anybody who chose to stick by the Adani
I think
stocks.
that sounds like a very, very middle class retail investor.
Fair enough. See, so it depends upon where you're sitting when it comes to decision making, especially when it comes to money and buying stocks or selling them. So that's the story as far as GQG and Rajiv Jain and their investments into the Adani Group is concerned. And with that, I'm afraid we've completely run out of time here on this edition of Business Plus. I'm going to thank Karthik Malhotra for taking time out to be with us here on this edition.
Thanks, Krishna.
This is Krishna Kumar signing off from Business Plus, but do not go anywhere. We'll be back with Last Stick with all the market action with our very own Suyash Maheshwari and Amit Gupta from Fintech Capital as well. So don't go anywhere. Keep it with News 9 Live.